All right, good evening, guys. Ken at Tortoise Capital, nightly strategy podcast for April 30th, 2024. So we'll start with 30-minute hybrid swing portfolio. All right, so the yellow box represents today's price action. So this was yesterday's close. That was yesterday's beautiful long side trade. Today, big gap down to here. Harsh sell off. We get short, standard risk. It sells off. Here's where the R10 bottoms out and starts to reverse up. So we take the exit at the skin of the dragon for a total of about 2R. And then it continued to roll over and close at the very low of the day. So there's more pain and suffering in store for tomorrow, that would suggest. AI, oops, just a moment. So AI closed here, opened here, rolled up. Now the whole market's starting to roll over. This is an opportunity trade. You see the rising Bollinger Band and you see the sell-off in the VWAP. When that crosses below, when the R10 crosses below the Bollinger Band mean, short, standard risk, sells off hard. Then in the last half an hour, just pick an exit. That's also about 2R. That's got more room to go to probably back to here. And then here. So there's two more legs down in AI potentially coming. Caterpillar, same trade. Here's yesterday's close. Here's the gap down, continues to sell off short, standard risk, drops like a stone. There's the bottom of the R10. It comes back, exit at the skin of the dragon, 2R. When you see this in every symbol and in the market, you should be on the short side of these trades. Feel the direction of the day. Stay with it. Cliff Natural Resources. Why do I trade him? Oh, this is why. Yesterday's close, the gap down was already a collapsing dragon because there's the support level. It broke down here. So speculate short with the standard risk. That's about 20 cents. In the first 30 minutes, it drops to here and then does this all day. And I exit because I don't want any overnight risk. Like it didn't even come close to reversing and coming to the edge of the skin of the dragon, but I'm just out there. And that trade, 4, 5, 6, 7, that's about 8 on a single position. And probably right in here, probably should have had a second position on, but it was a span of control and capital because it was short a lot of things today. CVS, now this one, again, you got to follow price. Here was the close yesterday. It gapped down to here, took off, broke through the PSAR, pulled back to here, took off again, got long, standard risk. Now this was pretty poor. It ran all the way up and then all the way back, and I scratched it. So that was wasteful of this nice opportunity. At one point, it was over an R&N, and then I couldn't get in the zero state, and I missed this long side trade. So Don't do that, but no loss. I'll just try to get better. This is DIA closed here, gap down to here, sold off all the way to here, opened, came up, reversed again intra-bar, short, standard risk, collapsing. At this point, it started to reverse and came up and hit the skin of the dragon. I exited and then it immediately sold off and continued to fail all day and close at the low. I didn't have the zero state mentality to get back in, but we did bring home 3R. This is in DIA. This is the Dow Jones Industrials. When the market is that decisively down, you should be on the short side of trades. Disney, tried the short side, tried following my own advice. There's the gap down. Sold off, came back, and then I got a bad fill. So ended up losing money on that one, and then didn't have the presence of mind to take the re-entry short. So there was a small opportunity there. Devon Energy. Big gap down in energy. There's the close. Here's the gap down. Sells off. Short, standard risk. There's the bottom of the RL10. It reverses. You take the skin of the dragon exit for 3R. Emerging markets, this is that big gap that it typically has. It rolled over. At this point, it had come through to VWAP. It's through the Bollinger Band main. So I'll speculate in. It sells off all day. I get out in the last half an hour for 2R. No overnight risk in EEM. Do not take overnight risk in EEM. Check on learning. How much overnight risk should we take on EEM? Answer: zero. Correct. This is ETHE. You can't get short, but if you're trading the currency, you could be short in here and enjoy that move. Back down to key price level around 20. Mexico. All you should be doing is trading Mexico. I mean, gee whiz. There's the close. Here's the gap open. It briefly toyed higher. When it comes down through the Bollinger Band main, and you got this declining VWAP, and the whole market is selling off, short, standard risk, second position. It goes through the anchored VWAP of the 150-day period. So this is like one of the sniper time frames, 150 days. That's the average volume weighted average price. So there's the 2R battle drill. It breaks through, third position. And now near the end of the day, how much overnight risk am I going to take? Zero. So I get out here. That's 1, 2, 3, 4R on the first one, 2R on the second one, 1R on the third one, total 7R. No overnight risk. Brazil, big gap down. There's the close. There's the gap down, sells off. Short. There's the bottom of the R10. Take the exit at the skin of the dragon. 1, 2, 3R. Kind of boring. No trade on Home Depot. I tried the short on Intel. It really didn't do much. Gave an R after the grind. IP. I tried this short because here was the close. Here's the gap opening. I'm short, it comes all the way down, it comes back, I scratch. The whole market was selling off so hard that I didn't look for the stop and reverse. I mean, it actually finished pretty well. One of the few things that actually finished stronger, except, oh no, it didn't in the last half hour. Psych. That's how quickly that last half hour changes. So be judicious on your ability to read what the close is like based on the intraday moves. That last half hour when guys are unwinding leverage positions changes in an awful hurry. IYR, a very strongly trending US residential real estate ETF. Here was the close, here was the gap down. It continued to sell off, so short, standard risk, collapse, exit, no overnight risk. On 1 unit of risk, 1, 2, 3R. Coke. This one was something else, man. Closed here, opened here, went all the way up, came all the way back down, short. I was open to get a return to the close. It did, and kept dropping like a stone. Reversed hard, so I took the exit at the skin of the dragon. That was like a roller coaster. So 4R, and then I missed the re-entry on the short side just because I wasn't prepared. I was clear about what I was seeing, but I wasn't mentally prepared for it. KRE regional banks were collapsing, so short at the low of the day, below the VWAP, sells off. It came back. I took the skin of the dragon. I thought about re-entering short because there were still a couple hours left. Didn't take it, and then the bottom dropped out. So that was, I only kept about half an R out of 2R, and then I missed all that. So pretty sloppy. McDonald's, no trade. 3M. This one was gap up opening, ran all the way up. The whole market was selling off, shorted to front run the VWAP cross. It sold off hard to here, to the PSAR, and then as it reversed, I took the skin of the dragon exit for about 1R. Merck, no trade. Microsoft, beauty. So this long slide continues. Here's where it closed. Here was the gap opening, sold off, new low of the day, short, standard risk, the long slide, and then in the last half hour, absolutely collapsed. I exited here because I was getting close to the close of the day. That's about 5R. And importantly, it's below the support level at the edge of the dragon and below the long-term VWAP. So that is the beginning of fearful selling. It's not a panic yet, but that's fearful selling. That's the beginning of emotional selling. Marijuana, beauty. Oh, man. The number one trading symbol for us. There's the sideways quiet channel. Yesterday's first little burst up and sell off. Today it opened here, cruised sideways, and then just exploded. There was probably some news. I don't even know. Bought it, standard risk. It ran all the way to here. And as it started failing, I said, oh, wake up, dummy, exit, capturing about 4R and left 4R on the table and then missed another 6R on the way back up. So I must have been smoking some of that dope that was on sale. Nike, gap down, harsh sell off, 2R. NVIDIA, crossed back below the VWAP, PSAR flipped, short for 1R. That held up actually pretty well. I think there's relative strength in that. Clean energy, also gapped down but then for short, but really never went anywhere for a scratch. Palantir, collapsing dragon, short 4R. Rivian, short for half an R. This is a case of what I was looking for on this one, because by the time I'm in this position, the gap is here and the whole market is selling off. This thing runs up briefly and then rolls over. When it comes through the VWAP and the Bollinger Band mean, that's a signal that this entire move up is over, and now maybe it's going to short just like the rest of the market. So I get short. It doesn't really do much. So we get half an R. There were better things failing than this in the afternoon. So that actually had some relative strength, to be honest. And I actually saw a Rivian on the road this morning. It's a beautiful looking vehicle. I thought about SOUN. I tried shorting, had trouble getting it on loan from the broker, so missed what was a sweet short. But that's one of the things that will happen when it's low cost. This is the S&P. This has got to be on your screen so you can see, oh, the market broke through the Bollinger Band mean. The VWAP is down all day. The RL10 is in the harsh winter all day. It's crashing through the 3-day anchored VWAP, the 5-day anchored VWAP, almost, and gets to the 10-day anchored VWAP. We've got to see that as the market condition. And when the market, remember, the market is worth 50% of the volatility and directionality of the moves each day, and the sector is worth another 25%. Individual companies their own buying and selling only accounts for about 25% of the variation in their price value during the time period. So you got to get the market right. So you've got to have SPY on your screen, and you got to be able to detect that as a directional day early in the day. When it crosses below the Bollinger Band mean and the anchored 3-day VWAP, the downside move back to these price levels is not surprising. Treasuries sold off too. Tesla, short for 2R. It really didn't collapse below the Bollinger Band mean until the last few moments of the day. That's actually relative strength manifesting in Tesla. So it's still on sale. Walmart, when a market leader like an old reliable it gaps down all the way to here and sells off, and it has no resistance or no support in sight, short, standard risk, fails. It came all the way back to the VWAP. I just got out here because that gap and harsh sell-off was so big. The RL10 didn't bottom out until all the way over here. But after that move, and I'd given back half of the maximum favorable excursion, I just take that as an exit, collect 2R, and leave it alone. US Steel was weak, no trade. XLI, right from the get-go, it breaks down through. Here's the close. Here's the open. Runs up, breaks down through the Bollinger Band mean, through the VWAP. Short, standard risk. 2R battle drill. I would not be offended if you exited here, but it briefly touched and then rolled over fast. So I exited near the close of the day. And that was 1, 2, 3, 4 on the first one, 2 on the second one for 6R. in XLI, and it closed at the low of the day. There's more weakness in store tomorrow. Three-minute sniper trades of the day. So now we're on 3 minutes. Sniper trades of the day. This is EWW. Sorry for my handwriting. EWW, Mexico. Here's the OR3. It monkeys around here, never even gets out of the dragon. The PSAR's in effect. When it breaks below here, that's a collapsing dragon, and now I want to be short. And where would I draw my risk? Probably right here to the top of the PSAR and use that as a standard risk. Check or hold. Second position short, another collapsing dragon. Scratch on the second position, collected about 2 on the first position. So this one earned about 2. This one was a scratch. Check or hold. Re-entry on a new collapsing dragon. Same standard risk. Same second position. Standard exit at the PSAR flip. The first position earns 1, 2. The second position earns about a half. So call that 2.5. And this other one has 2. I have no interest. Yes, these are in addition to the other 30-minute ones, because that was the best looking 30-minute chart. So I just dialed down to this one and traded them in tandem. This is a re-entry on the COTA 2 short. Second position on the next collapsing dragon. Third position because why not exit near the end of the day? Now, you don't have to trade both the 3-minute and the 30-minute, but I like showing the relationship between those two different time frames. Now, this one gives you on the first position 1, 2, 3, 4. This one gives you 2. This one gives you 1. So that's another 7 plus 4.5. This had potential for an 11R intraday trade. If you just take the 30-minute, you probably get 6 if you take all 3. But that has a wider stop. But it's a more orderly series too. All that little backing and filling that kicks you out on the 3-minute charts, which we're going to see on Kevin's chart here in a minute, is hidden inside the directionality of the 30-minute bar. So there's something to be said for that, having that 10 times higher time frame. When you go from what looks like clear signals on a 3-minute chart is just a downward move on a 30-minute chart. It's just noise. So this will get you in and out more, but with the tighter stop, this one you got to wait longer. Your position size is smaller, but you probably have fewer trades. So that's the sniper trades of the day. All right, Tesla for Hamad. So there's the close. Here's your gap down. It runs up. So he's looking for that to come back to the Bollinger Band mean or to close the gap. That's fine. When it doesn't work, he cuts it right away. I would try to get short here when it crosses below the VWAP. Let me draw that in orange. So this is the VWAP all day, right? So as long as that's the case, I have a downside bias when price is below. So in that case, the earliest entry you could get short would be here. Um, your standard risk box is about like that. So you would still stay in here, but that's still a good entry after the peak, because now you have a lower high. Cash, I maybe one bar earlier, but that's a good reentry. When this doesn't work right away, I'm probably out a bar sooner instead of waiting for the full PSAR flip. That's a 1-2-3 exit here, a 1-2 exit there, or a scratch. So I think we could maybe be a little tighter on that. I, I'm I don't I'm not offended by that entry long right there. He's looking at this had a 1-2-3, it held. It's so close to the VWAP that if that breaks, there's a good chance it gets to the high of the day, which is here. And then if it gets through there, it could close the gap, which is here. So that's a reasonable entry against that risk for potentially 1-2-3-4. When it doesn't work right away, I don't even like taking the full 1 hour loss on that, but I do like the stop and reverse. Now, this one I feel like you wanted to get paid, so you ended up letting that become a 0.2, and then we end up missing that gain until we re-enter here. So you're almost getting too close, and that's a good scratch, and then good job staying out of the pain and suffering. The only improvements I can suggest in here is probably this one. I'm just concerned. I was concerned about this, but if I was going to take a risk on anything, I think it would be on Tesla to close that gap, because when the market has a big sell-off, I would ask it, was SPY turning around and going up? I don't think so. But if you were going to risk anything, it would be Tesla because it had a lot of relative strength. So if anything was going to lead the way in closing the gap, it's Tesla. So I'm not offended by that trade at all. And I love the quick exit. I think you could be short as soon as it crosses the VWAP, like I said in there. But that's still pretty good. Plus 0.8 on this one. I love this sequence right here. This breaking at the low of the day, nice. And then a nice skilled entry or exit here. I like that you didn't chase. And then when this rolled over, that's about as good a re-entry as you can get. I like getting paid. I like the re-entry, the quick cut, a re-entry, quick cut. This one, I could see why after two no trades, you might try that one. That didn't cost much. But by the same token, when that one fails to follow through, I think you could have shorted that and you would have gotten paid here. And that would have turned this into probably a 1.5. So I don't mind that. I think it's justifiable, but I think I'd stay with it on the short side because this is when everything was failing. The whole world was failing right there. Nice job on Alcoa. You got what was available. I would say probably on this collapsing dragon, or when this rolls over, I think I like getting short in here or here on a new low of the day. And I think that's a better entry short than this because it'll save you that much, which is almost an R for you. So this could have been a 1.4. Other than that, I think it's that's a good shot. This one, I think you were late to get out on. When that rolls over, I think you got to get out here. And then I think that could be your short instead of this. So there was actually some room in Alcoa for some improvements there. I would say study that one. I like that it's positive, but I think there's more room for improvement there. Brian continuing to crush the Kiwi US dollar for another 1.5. And he's showing you how to do it right there. He's just showing you how to do it. Kevin is combining the this is on EWW, and he's using both the 30-minute and the 3-minute. He gets let's see. So short here, cover here. When it fails to fail, he takes a little fractional, and then the RL30 rolls over. So that's a COTA 2 and breaking through yesterday's low. Nice. Cash, re-entry, cash. That's pretty good shooting. 3.5. I like that. Really like it. This is what that looked like on a 3-minute. So here's sort of the now a lot more trading around inside here, but he also brings home 4.9 on the 3-minute, vice 3.5 on the 30-minute. A lot more shorter legs. You know, there's this one and this one. So he's on the right side of the angels on this one. And it comes all the way from, you know, the daily VWAP all the way down to probably what's at the 5-day VWAP or 3. Yeah. Yeah, it's a challenge when you're mixing the time frames. That'll happen. That's why it's an edge when you can do it. George, on NVIDIA, this is one where NVIDIA actually had some relative strength. So he gets long, it runs all the way up, comes back to scratch. Let's try to get to no lose plus dinner for 2 and make a piece. Re-entry short, and then it reverses and catches them. And then it comes back and starts new low of the day here. Maybe. There were other things failing worse, so I like that you didn't chase. Let's see, tried the let's see, gapped down to here, ran up, came down. Oh yeah, so on the way up, he takes the COTA 2 long and then exits here. I think probably could have gotten out of that sooner. Maybe when it crosses the VWAP or the Bollinger, but still that's pretty good. But then when it reverses, he has the foresight to re-enter on the long side and then gets this one. More was available, but that's pretty good, and it offsets the loss. So net's 0.1. This is in SOUN, our little speculative AI company. When this doesn't break, and now the R30 is rolling over, skin of the dragon, that gives you a minus 0.9. The stop and reverse. Oh, Don't miss those. The fish are trying to jump into the boat. This is a 10-minute chart on Alcoa. By this time in the day, this was such a decisive move down. I get the short-term spec. When you get long here and then it reverses immediately after watching all of this, don't wait for it to come all the way down here, please. Take the skin of the dragon. And same thing on this one. You tried it, it doesn't even, starts failing right away. Skin of the dragon. Same thing on this one. XLI intraday from the start of the day. Come on. PSAR flip, turn to winter, big harsh sell off, new low of the day, new low of the day. Somewhere in here, we got to get that. Now, there's a 1, 2, 3 and a PSAR flip. When this rolls over right away, take it. After you watch this, there's nobody out there that's looking at the components of XLI, the industrials, as some kind of speculative, large volatility guys that are going to explode like young tech companies. These are industrial companies. And after that, that's just that's short covering. There's almost no buying interest. And then Hulk smash. So don't wait that long to get out. If it doesn't work right away, get out. Right. Daily reports. Yeah, the interesting thing on 3M was that the whole market was getting murdered today. But 3M, this was company buying, gap up, strong, orderly pullback. It still did not close the gap. That was a strong signal right there. And it got back to where it was before. That's as symmetrical a trade as you could want. This little buy on dip opportunity failed in a big way today. It's halfway back down from the peak to the test. That's the collapsing dragon to end all collapsing dragons. So it gave a 50% retracement. So at the first sign of weakness, I'm short intraday, and then if it fails below here, I'm going to be massively short, targeting all the way back to the 150-day anchored VWAP. Yeah, this was the peak. Then yesterday or today's gap down open and sold off all the way down to here. That's all straight directional move after a big sell off and then a little dead cat bounce and then no follow through. Found resistance at the Bollinger Band main and started failing. That's prime shorting territory. And notice, like we showed before, it went through the 3-day anchored VWAP, the 5-day anchored VWAP, the 10-day anchored VWAP, almost came out the bottom of the dragon. And there's the trigger of the RL10 bottom. Here's the trigger off the lower skin of the dragon. If you want to get the earlier collapsing dragon, it's right here. The primary one's right there. So a lot of weakness baked into the cake. On the other hand, there were people that were buying this before, all the way back up to here. Are they bruised? Are they going to be ready to come in tomorrow? We'll see. Perfect storm for a compound critical state. You put a little bracket around where, if this is where it closed today, no matter where it opens, up here or up there, I'm just going to put a little bracket order of an R10 box on either side, and I'm going to play the breakout regardless of which direction it gaps. I don't know which way it's going to gap. On the day of a Fed conference, I just trade right from the open until about a half an hour before the Fed talks. And then try to pick up something in the last hour. So on the 30-minute chart, you can see this, the 3-day anchored VWAP was here. It opened here and then just collapsed all the way down. You got to be able to see it get through the 3-day, 5-day, past the 10-day, pure directional move. All of the goodwill that was built up earlier, all gone today. Weakness, bullish volatile, risk off. This is dangerous territory. Could recover, could fail. That's why it's risk off. 3M was the sole survivor today. Is it immune to further sell-offs in the indexes, or could it be a market leader tomorrow? Maybe. That's a big loss right there in Cisco. Wow. Did that get smashed? And Intel is just as bad as it can be. 6-1 and IBM's 12-1. Nucor Steel got murdered in the XLI sell-off as well. Marijuana, whoops, sorry. That move was so up 24% today. Just amazing move. Some weakness a little bit in ag and in gold. Now that's odd, isn't it? Why would gold show weakness today? Unless that was a 1-day temporary sell-off to gather inventory by introducing a little bit of fear. Could be. That's why tomorrow will be fun. Lots of auto framers to pick. Handful of squeezes. 3M really comes to mind as a key player there. Still dominated by the spring. This just shows you how pervasive that sell-off was today. Only Procter and Gamble and PayPal in the green. Healthcare staples. Otherwise, whew, Hulk smash. NVIDIA, Tesla, Intel, marijuana, clean energy, Nucor, CAT, metals and mining. There's that big red candle. All the hopes and dreams. Is it going to be like this, which had 3 days of buying, or is it going to be like this, which had 4 days of selling? Which candle is this like? what is your back testing would tell you that both of those are equally likely. My spider sense says if it continues to the bottom, to the downside, and it breaks below 495, you better look out below, because then it looks like this. All right, that's everything for today. We'll get this published and posted and ready for them tomorrow. Take good care.